Hi, this is Daniel with Unrivaled Investing, bringing you another uncut video on potential multi-baggers. So today we are going to be talking about this company, which it's a mystery company, and it's a question of, is this another Livongo? Is this a 10x potential? And what is the company? So we're going to be exploring all these things. Is it another Livongo? What's the company, and does it have 10x potential? And it's also a company that I actually just bought in this past week, so I clearly think there's a lot of upside. Let's dive in. So the first thing is that there is a disclaimer here. You can read it on your own time. So next, what's the value that I'm trying to bring to you? The value here is I'm trying to find multi-baggers, potential multi-baggers. I identify their value proposition relative to the ecosystem that they operate in. So what's that mean? It means, do you have a company that offers something that other companies don't offer? It can be in quality, it can be in service, it can be in price. But if you have an unrivaled value proposition, generally you beat your competitors and gives you the right to win. And then if you have the right to win, then the next really important question is, what's the size of your market? Is it a stagnating market? Is it declining? Or is it this huge wide open field? Because if it's a wide open field and you have an unrivaled value proposition, you could have incredible growth in the years ahead. So that's what I've tried to do in some of my past videos. I've talked about Livongo twice. The first was an intro. The next was sort of a follow-up where I talked about my own personal position sizing. And then more recently was Despegar, the online travel agency in Latin America. So if you like these types of videos, hit that subscribe button so you can be the first to hear about them. So next is, what's the company that we're going to be talking about today? And the company is called Novocure. The ticker is NVCR, and that's the company of interest. So first, as I expressed earlier, I do have skin in the game on this one. You can see I bought a teaser position earlier this past week, bought a little under $6,000. And the reason why it's a teaser position is that I can leg in if the company executes, or if I can get better prices in the future. It's either or. Sometimes it's a bit of both, where if the price stays flat, but I see that they continue to execute, maybe I buy more for myself. And so, yeah, you can see that I've been buying a teaser position for myself here. So I clearly, there's skin in the game. This is not just a random YouTuber saying like, hey, this is an interesting company, let me break it down. Like I do have a horse in this race. The next one is, what do they do? So I can read it to you here. We are a global oncology company. This is from their 10K, with a proprietary platform technology called tumor treating fields, the use of electric fields tuned to specific frequencies to disrupt solid tumor cancer cell division. That sounds honestly like a bunch of hocus pocus if this is your first time hearing it. And so when I first started researching it, I was like, okay, this sounds cool. You're using electrical fields to disrupt tumors. So this is an oncology related company. It's to fight cancer. But is this even legit? Are they a pre-revenue, pie in the sky company, or is this a legitimate company, with revenue or even profitability? And so, if you take a quick look at their results, you see, whoa, this is a legitimate company. I mean, they have doubled in the last 2 years from $177 million to $351 million. They are crushing it. And then also more recently, if you look at 2019, they are on a path to break even or profitability, and with minimal dilution during this time period. So that's pretty interesting to me. And so let's dig in a little bit. So they talk about, like gravity and magnetic fields, electric fields exert forces at a distance. So they talk about how you can have gravity, you can have magnets, and you have electric fields. And so here from the 10K, a little more detail, they say tumor treating fields is a cancer therapy that uses electric fields tuned to specific frequency to disrupt cell division, inhibiting tumor growth and causing affected cancer cells to die. Our track record of fundamental scientific research extends across 2 decades, and in all of our preclinical research to date, tumor treating fields has demonstrated consistent antimitotic effect. In our clinical research and commercial experience to date, tumor treating fields has exhibited no systemic toxicity, with mild to moderate skin irritation being the most common side effect. I mean, this is super interesting. They're saying if you use some sort of electric field that can change whether or not it's positive or negative on the proteins of the cancer, you can prevent the cancer duplicating or spreading. So let's see more detail on this. And so here's where they're talking about their range of, like this is the frequency tuned to target dividing cancer cells. And you see that Tumor Treating Fields is actually this sort of narrow range of 10,000 kilohertz to 1,000 kilohertz. Whereas if you go to the extreme ends, you see DNA damage, and you can see, this is the lower frequency used for cardiac defibrillators or a pacemaker. But you see in this range, you might have some impact on pancreatic cancer, ovarian cancer, glioblastoma. So these are all different types of cancers that maybe if you sort of zap it and people are wearing some sort of device and they're getting zapped at this frequency targeting their specific cancer cells, you might be able to stop the cancer from spreading. And so here's an example where it shows the control without the system, and then with the Tumor Treating Fields. And it seems like a pretty clear picture of like something's happening. It's not spreading. It's not as clearly easily spreading. Like it's definitely getting all sorts of screwed up. And so, let's assess a company based on its risk profile, and seeing that, hey, there's been an FDA approval means you're starting to de-risk your thesis as you underwrite this investment. Tumor Treating Fields deliver systems FDA approved for glioblastoma and MPM. So here's this device that you wear if you have GBM or glioblastoma, and you wear it, and it helps you with glioblastoma. Is incredibly lethal and severe brain cancer. And you can check out several YouTube videos for Optune, which is the system that Novocure sells, as well as real life cases. Here's Fox 11 Los Angeles News. I don't think they have a horse in the race on this one to like make up results. Here's another one. Where it's another lady, Monique, is talking about how she likes to exercise and wear the device, and she was diagnosed 5 years ago with glioblastoma. That's a big deal. So you can Google this. Like, this is actually a legitimate product. It's growing. Like, their revenues are supported by another data point. You can do your own YouTube due diligence. And then they also talk about it here, where this is also from their company presentation, where 5 years in, the survival rate for GBM patients or cancer fighters is 13% when you combine it with the chemotherapy drug TMZ, whereas on TMZ alone it's 5%. So 13% versus 5%, so nearly a 3x survival rate. When you see something like that, like, whoa, you're going from 5% to 13%. Now, first, it's like, man, if you have GBM, it's still you're likely to be dead within 5 years. But this is a game changer. Let's not put it down for it only being at 13%. That's a big deal. If you're one of those folks diagnosed with it, that's a potential life changer. If that's 1 out of 10 versus 1 out of 20 that survive. So that's a big deal. And when you have a big deal like that, that means you might have an unrivaled value proposition, because I don't see other companies offering something that is a better solution. And that's why they're calling out they're the number one offered solution now for dealing with GBM. In this, that data combined with this, which shows that the usage over time correlates to the survival rate. So the longer you used it, were you using it 12 hours a day? Were you using it 24 hours a day? Like sleeping with this mask, or this sheet that you're keeping on your head, these with electric stimulus. There's a direct correlation to it. So that type of data point suggests to me that there's some sort of there's definitely legitimacy to this in terms of survival rates, and there's something to this science that's being figured out. And you can also see it, as they, there's an opportunity to grow here, where in the US, they're growing nearly 50% in the first quarter. And then in Japan, they're rolling out in other markets around the world. In Japan, it's up double. And then you can see it further, as we look, like, whoa, this is a huge potential market opportunity. Because if you're right now, you're just focused on glioblastoma, which is this, and MPM, there's a whole potential market of expanding into other types of cancers, other types of physical tumors. What if you can start getting into brain metastases or non-small cell lung cancer? You can see in 3 years from now, they could potentially be looking at other different types of cancers. I mean, this means their potential addressable market goes from this to that, and then from this to that, which is non-small cell lung cancer, pancreatic cancer, ovarian cancer. This is a big deal. I mean, this is at least 10x. And what's interesting is, if they were just to stay here, in just the glioblastoma, part of the market, that could still justify significant growth in the years ahead. Probably pencil out 10-20% growth in the years ahead if they just stayed here. But if you start targeting these other markets, and they need to prove that their technology works on tumors, in these areas, pancreatic tumors, ovarian tumors, cancer. If that's the case, man, that can cause a re-rating in this company. And what's the time frame for finding out whether or not their electric field technology, their Optune technology, will actually work for these types of cancers? And the phase 2 and phase 3 tests are going on right now, and you can see, look, their data from their phase 3 trial will be in 2022. For non-small cell lung cancer, it'll be 2023, 2021 for liver cancer, gastric cancer, 2021. I mean, that is a year from now that people are going to be finding out the potential results. That is a game changer. Once people find out, like, well, wait a second, if this works, and keep in mind, they're already going to be growing 10-20% a year just on their current market. But if these results are positive, and we were watching the videos earlier, there's nothing to make us think like, hey, it shouldn't work on this type of tumor versus another. I mean, it makes sense in theory. That would suggest, like, whoa, people will say this is not a multi-billion-dollar opportunity. This is tens of billions or $100 billion opportunity. And to talk about de-risking the thesis, you can see here, Merck is getting involved. Novocure announces clinical trial collaboration with MSD, which is a trade name of Merck, to evaluate tumor treating fields together with Keytruda in non-small cell lung cancer. So other major companies, they're doing the due diligence to size this up. Like, is this a legitimate product? Is it, they've done, let's just say Merck's done enough research to say, hey, this is worth digging into. Like, this is worth investing in. And next up, you see, look, China, they approve Optune for treatment. So this is a global. This is becoming a global company, where people are saying, whoa, this can be used as a new standard of care for glioblastoma, and let's see what happens next. I mean, here it says Novocure, a global oncology company with a proprietary platform therapy called Tumor Treating Fields, and Zai Lab Limited, an innovative commercial stage biopharmaceutical company, today announced that the China National Medical Products Administration, which sounds a lot like the FDA in the US, has approved the marketing authorization application for Optune in combination with temozolomide for the treatment of patients, or I think that's TMZ, with newly diagnosed glioblastoma. That was earlier in the slide showing, whereas if you have TMZ and these tumor, these tumor treating fields, your survival rate for 5 years goes from 5% to 13%. So China's saying, like, hey, we're buying into this too. So what are the risks? I've talked a lot about the upside. Clearly the market potential is huge, but there's a lot of risks as well. First, read the SEC filing on your own to do your own due diligence. But first, their growth rate could decelerate. You see the number of active patients year over year is only about 22%. So if you're seeing like 50% top line growth, active patients, it's only 22%. That means there's been some price increases as well, which means they're passing on higher costs to the insurers. And I'm doing back of the envelope, but the implied cost to those insurers is about $140,000 a year for U.S. patients. That is a lot of money. And that's a tricky question for one to think about, just because, if that becomes the new standard of care, that means the full, 85% of the population that still dies after 5 years, they're going to be paying this extra $140,000 per year, or the insurers are going to be paying an extra $140,000 a year to try to get the improved survival rate. So that there is a tricky aspect to that. So that there might be this might be a lot of cost for too little upside. Another aspect is that the valuation could compress significantly. The last 2 years, if you look at a forward sales, I wrote revenue, but it should be forward sales to like market cap range. It ranged from like 7 to 9 times on the low side and 20 to 26 times on the high side. So this is just a ballpark back of the envelope. Like, how has this been valued over the last few years? And currently it's around 12 times based on the approximate growth, so far during the first quarter. So if they were to go back to like the low of the last 2 years from a valuation side, that would be about 50% downside at least. And then, as I mentioned earlier, the effectiveness. I already talked about $140,000. That's expensive. Will it be able to keep raising prices, or will it just track patient volume, in the future? But also the effectiveness. I don't know if 13% survival after 5 years is going to be enough. That delta between 5% and 13%. And also, so I have some final conclusions to share on Novocure. But first, if you want to learn more about potential multi-baggers in the future, not just about Novocure, but other companies, hit the like button. And also, if you want to be the first to find out about these videos when I publish them, hit that subscribe button now. So, and there's also unrivaledinvesting.com, which is my own personal financial journey. You can go there, unrivaledinvesting.com. If you subscribe, you can see my personal investment portfolio, what I buy, sell, the reasons why, my top holdings. So that's for the folks that want to know more about my own personal investment journey, that don't just want to see these one-off videos. And then also, so let's dig into that conclusion. So part one, Novocure and Livongo. It's interesting. I talked about Livongo earlier as a multi-bagger company in my prior videos, and regular viewers know that earlier this year I bought Livongo around $23 a share, and subsequently it went up over 4x. I don't know what Novocure is going to do, but it does have some similarities to Livongo. For example, there's the remote treatment trend, where you effectively enable your patient to continue to live their life, ideally making them healthier in a remote way. So it's a remote treatment. Another aspect is you're expanding into adjacent markets. Livongo is expanding just being from diabetes into all these other, like behavioral health, hypertension, these other markets that really create even more of an opportunity for them. And I think you're going to see the same thing here with Novocure. I as a betting man, by buying a teaser position, I'm effectively saying, I bet I'll be fine if they just stick to glioblastoma. I think as a betting man, there's a good chance that maybe it's, pancreatic cancer they can also help out. Maybe it's, ovarian cancer. I bet that there's another type of cancer that, using their tumor treating fields, they could potentially help solve. And then another aspect is execution. Another aspect of comparing Novocure to Livongo is just seeing the execution, where, quarter over quarter, you're seeing their growth rate. When you see a growth rate like Novocure, like Livongo posts, it gets more people interested. So there definitely is, aspects to this where this could become sort of like a story stock. People say, oh man, this is incredibly interesting. So part two of the thesis, the company is growing nearly 40%. In the US alone, they're growing closer to 50%. And even remotely favorable news on their trials can cause a re-rating. And as I pointed out earlier, you do have a few catalysts in the next couple of years where they're going through the current phase 2, phase 3 FDA trials for these cancers. So if they put out data showing, hey, this is actually resulting in a multiple better survival rate than the current best standard of care treatment, I mean, people will wake up and say, holy moly, this is tens of billions of dollar opportunity that they're tapping into. And there's a good chance that I would expect another pharmaceutical company like Merck, by partnering with them now, is sort of saying, hey, we want to know about this. So I would suspect if they start getting favorable trial data, you could even see a potential bidder for the company say, hey, let's just own this. That way we have all that upside, and try to buy it from shareholders, lock it in at a good rate. So there is, significant optionality in the years ahead if they're able to move beyond glioblastoma. That said, like all growth companies, it will be a volatile ride. I own a teaser position, with the intention that, look, it's volatile. It's effectively break even, slightly profitable. First quarter of 2020 was profitable. But when you have a company that's proving their operating margins, it's inherently volatile, because one day people might say, well, maybe this is a 10% operating margin. The next day they might say this is a 30% operating margin. That type of delta causes a huge volatility in the stock. And so it wouldn't surprise me if it's down 50% at some point in the future. That's what growth companies do. That's what multi-baggers do. It's never, grow straight into heaven. You do have volatility, but investors, you should know what you're signing up for. And that's a combination of valuation improving, their value proposition. The next thought process is like, look, on a high level perspective, Novocure has a strong balance sheet, hundreds of millions of cash. They were profitable in the first quarter. It's like break even, a couple $1 million. And then quick look at management. Like, let's take a quick look at this. Like, hey, the executive chairman, William Doyle, he previously launched his own venture capital firm, which he's invested in Novocure. Okay, that's cool. Previously, he worked at Johnson & Johnson's medical device segment and was vice president of licensing and acquisitions. So, like, this guy works for a legitimate company. And if you're talking about Johnson & Johnson medical devices, that's probably bringing best practices to a company like Novocure. So it'd be good to know what that is. And then also he worked for Pershing Square Capital, which I believe is Bill Ackman's hedge fund. So the odds of this being some sort of scam, like, the more data points I see, the lower, like, it de-risks the thesis that there could be cockroaches in the kitchen. Seeing data points like this makes me feel more comfortable. And then the last part is, I like the setup. First, it seems like they have an unrivaled value proposition. I don't see other companies offering what they do. And talking about survival rates going from 5% to 13%, while that doesn't sound crazy, crazy incredible to you, if you're diagnosed with glioblastoma, you want to be part of that 13%, not of that 5%. So that does strike me as an unrivaled value proposition. Next, they're self-funding. So, if you're talking about potential 10x plus growth in the future, which certainly looks like it's possible, being in a position of self-funding means you as a shareholder don't have to worry as much about dilution, because they can profitably fund their growth in the years ahead. And that's what it looks like. Could they dilute in the future? Possible, but it's not going to be like a pre-revenue business where you're going to have crazy dilution and you can get wiped out. So huge potential upside, literally 10x just based on that chart I showed you of, like, hey, here are the different markets that they're tapping into. Also, there's an element that I didn't bring up in this presentation so far, which is a huge one, and I should have brought it up, which is that they can improve. If they start using, artificial intelligence, machine learning, they might be able to bump up that survival rate from like 13%, maybe to 20, maybe to 50. Maybe they figure out, like, hey, we need to set these electrical fields to this type of frequency and target these types of cells. And if we get enough data, we'll figure out, like, for this patient, it resulted in a much better, outcome versus these. And so the more data they get, the better the product it will be. That's what I expect to happen over time. So there's a good chance that while they're at 13% now, they might be at 20% in a couple of years, or even 50%. And if that happens, man, now you really do have a runaway stock, because it is you're the company that treated cancer. I mean, that's a game changer, especially when you're looking at all these different type of cancers that they're looking at. And then in the next, you don't even have to wait this long. Like, they've already done a lot of the de-risking. It's not like you're investing pre-revenue where it's just an idea. There are near-term catalysts. In the next 1 to 3 years, you're going to see, like, oh, does it work on pancreatic cancer? That'll be like a snap. If investors see that, this becomes a story stock, in my opinion. Story stock where people just buy it because they go, wow, this is what's going to defeat cancer. And that, if that happens, this could potentially go through the roof. That's how I'm thinking of, like, the upside potential. The downside is that, like, look, I already talked about the downside risk. It's expensive. Maybe the effectiveness doesn't improve that much. But right now, like, watch the company. Let's see if they de-risk, maybe move from glioblastoma to other types of cancers, and let's watch them continue to execute. I find it to be an incredibly interesting story. I'm excited that I own it. Clients of Unrivaled Capital also own it. It's a teaser position, so I'd be excited to buy more in the future. And let's watch it together. Thank you so much for watching.